tariffs may still not be driving up consumer inflation, but we continue to see impact on producers. A quick inflation follow-up after Wednesday's producer inflation data. So after Tuesday's better-than-expected CPI report, markets were looking for confirmation that inflation pressures were truly easing. Instead, the PPI delivered a more complicated picture. On the surface, the headline numbers looked encouraging, with producer pricing up just 0.1% in October and 0.2% in November. That closely tracks CPI, which increased only about 0.2% over the same 2-month stretch. But digging into the details, the picture shifts a bit. Core PPI was relatively tame in November, up 0.2% month over month, but that was off a sharp spike in October, jumping 0.7%. That's a meaningful acceleration and likely where tariff-related cost pressures continue to show up. On a year-over-year basis, core PPI climbed 3.5% in November. That's a step up from 3.0% in September. However, so far, those pressures haven't flowed through to consumer inflation as CPI continues to remain muted. But we still expect more consumer price impact the longer tariffs are in effect. So now what? Well, near-term, markets likely continue to trade cautiously optimistic on inflation. Again, tariffs haven't really flowed through to consumers yet. There's also hope for a Supreme Court decision to limit or remove them as well. However, we do still see tariffs as a headwind for consumer inflation. We maintain that retailers continue to mitigate price increases while the situation is still in flux. On a macro level, muted CPI inflation still keeps the economic soft landing story alive, but PPI is a reminder that inflation risks, especially from tariffs, may still be working their way through the system. Producer inflation will catch up with December data at the end of the month. Stay tuned for more.